Hi, this is Jean Joe, and I'm back here with another episode of Perisson Pulse on February 16th, 2024. Just as a quick introduction for those of you who don't know me, I'm the broker and owner of Perisson Real Estate. Perisson comes from the Greek word for abundance and overflow, and that's what our company is all about. Ever since I started the company in 2016. I've been doing seminars, and this year launched this series of Perisson Pulse. I thought it would be nice for every Friday to people have to be able to just tune in and learn a little bit more about real estate and what's going on, and find out different topics. For this week, I'm going to be doing a real estate market update and talking about what came in with our January numbers as well as trends as a whole. And I'll be doing that once a month, just going through and talking about our real estate market. So the first thing that I usually like to cover is median sale price. And median sale price has to do with, if you were to take a price, the number of homes that are selling above it are the same as the number of homes selling below that price. So median sale price, this one is for single family homes in San Mateo County and goes all the way back to 2005. As you can see here, just coming through, before it was a little under 1 million in 2005, and then in 2008 and 9, this is right when I started real estate. We had that last great recession, and the prices came down to just a little under 500, a little over, sorry, 500,000. From there, during that time period, my colleagues and I would be talking. We go, oh, okay, when I get my first $1 million listing, I'm going to buy everybody lunch, because that was our goal. Funnily enough, that actually we were thankfully able to come out of the recession, and after a few years, and by 2014, we were hitting about $1 million levels in terms of a median sale price for the county. Not too much later after that, by 2018, which is only 10 years after I'd started, we hit a median sale price in the county of $1.5 million. Just mind-boggling to think about that. Well, since then, we've been continuing with ups and downs, of course, as always, going steadily on an upward trend. And then we hit the red vertical line here, which is our COVID lockdown that happened in March of 2020. When that first happened, for about a month or so, everybody was not sure what was going to happen, and so we weren't sure what direction we were going to go in. But as things started to open up, by the time we hit 2021 and the first half of 2022, really entered into some peak pricing in terms of our median sale price. We did hit an all-time high up here that you can see at that peak. That is April of 2022. And at that time, the median sale price was 2.25 million. From there, it did come down a bit. And so then we got to where January of 2023, and I'll go into why that is, but January 2023, we had a hit a little under 1.5 million. So went to 1.485 million. But not including that, the prices stayed well above the 1.5 million mark. So went about 1.7, 1.8, back and forth for a bit. So as of January of 2024, last month, our median sale price closed out at $1.85 million. That's still very, very respectable, very good. If you compare that to January of last year, that was that little dip here that we see. That's 1.485 million. So just within a year, we're able to see that the prices recover over time. Did not hit that peak, obviously, of over 2 million, but still very good number, 1.85 million. In 2023, compared to the month before, so December of last year, the median sale price was at 1.655. And generally, we're going to see December, January, because of the holidays, things start slowing down a little bit. So if you look at the trends over time, seasonal trends, usually December, January, you will hit a little bit lower in pricing, partly because not just because of the buyers, but also there are just less listings. And so the numbers are going to be skewed a little bit in those time periods. In January of 2022, just to note, the January right before we hit that all-time high, the peak was at 1.888 million. So if you think about it, 1.888 million for the January of 2022 compared to 1.85 in January of this year, it's not bad. So we're staying pretty good, pretty steady. The next metric that I like to talk about a lot is months of inventory. And this has to do with if you were to take the number of listings that we currently have on the market, and then not have any new listings, but just sell them at the rate that we have been selling, how many months would it take to run out? that's what we come down to calculate out to months of inventory. And as you can see here, there's a green horizontal line that shows what is considered traditionally a balanced market, which is 6 months of inventory. I would argue that here in the Bay Area, probably our balanced market is a little lower than 6 months, maybe 4 or 5. But in any case, that's what's traditionally the balanced market. Going back to 2008 levels, you can see that there was a point even where we hit over 10 months of inventory. And at that time during the recession, things were taking a lot longer to sell because for one of the reasons of which is just that we were dealing with a lot of short sales and foreclosures, and those can take a little bit longer to process, especially the short sales can take longer. And so the inventory would technically still be on the market for a much longer time period. And so we had a lot of inventory out there. And again, a lot of foreclosures were happening. There was just a lot of movement at the time and not selling as quickly. And so that's why you can see the pace is slower and there's more inventory. And so, of course, the months of inventory is going to be longer. Since that time, since about 2012, we've seen that number drop to about the 2-month level and stay there and stay there and stay there. So as much as people have talked about, oh, since the pandemic, the rest of the country was talking about low inventory, we were actually experiencing that over the last 12 years, over the last 10 years at the time. So we've been going through low inventory levels for 12 years, and that's not letting up. You do see the vertical line here where we had the COVID lockdown again. Soon after that, we did have a little bit of an increase in inventory just because things were not selling. And so but that quickly went down to where 2021 and 2022, just refreshing your memory, that's when the median sale price peaked. That's also when our inventory level was at all-time lows. And so we're talking about 1 month of inventory or 0.8 or 0.9, which would be like 3 weeks worth of inventory, where if nothing else came on market, we would just run out. And so that it goes to make sense that if you have a real seller's market where the buyers are, having to compete, the prices are going to go higher. Since that time, as we started toward the end of 2022, we did have the interest rates, which I'll talk about, increase quite a bit. And so that caused a reduction in the buyer demand. And so we did see, again, the prices kind of coming back down a little bit, and attached to that, the inventory levels coming up a little bit, but still around the 2-month mark. And that's where they've been hovering. For January of 2024, we saw the inventory levels at 2.3 months. That is actually exactly the same as it was for last year, for January of last year at 2.3 months. And even last year, we saw it go to 2.3 months and then come down to 2.1 months. And then it was under 2 months for the rest of the year. And so we'll see what happens during this year. But usually, again, December, January, sometimes February tend to be where we have a higher inventory that's been kind of left over from the previous year. And then we start to see the activity come in. But 2.3 months, that's where we're at for January. And then days to sell is another one that I talk about often. This has to do with if you were to take a home, put it on the market, and then how long would it take before you actually get it into contract? So it doesn't count escrow period and all of that, but just getting an accepted offer. As you can just intuitively think about that, it's, the shorter that time period, that means that you have a lot of people who are excited about it and wanting to buy. And so it doesn't have to sit on the market very long. And as you can see here, during the days of the recession and beyond, it took a little bit longer. Part of it had to do with, even if you had an accepted offer, you couldn't really, even if you had a short sale, and in fact, it would sometimes take a little longer before you actually could say that it was an accepted offer, fully accepted offer. So a lot of little complications to do with that, and properties weren't looking as good too because of because they were in a foreclosure or short sale situation. So it would just take longer to actually get even an offer in place. By 2012, you saw that this lower horizontal line here represents 10 days. The next one is 20 and then 30. We're basically, since 2012, been hovering between the 10 and 20-day mark. And just thinking about that, that means a week and a half to about 3 weeks, less than 3 weeks, we're able to see homes getting into contract. Of course, this is an average. It doesn't mean that every house did that, but to have that as a median days to sell is huge. So this median, sorry, not average. And by 2019, we did see, at one point, this is December, or sorry, January 2019, we did see that go up a little bit. And again, in January 2020, this dip down here where the COVID lockdown happened, it's not because things were selling in 0 days. It was just because our MLS had to made a decision to stop the time from ticking, because it wasn't really fair that you put a house on the market, nobody can see it because showings weren't allowed, no open houses were allowed. And so it just felt fair to kind of pause that time from ticking away. And that's why they went down to 0. Once the time clock got started, though, we started seeing everything going about the same until we get to the end of middle part of latter half of 2022, where we did see things taking longer to sell as we saw an impact on interest rates. That did come back down, thankfully, over the latter part of 2023. And for January, we're actually able to see it somewhere around 18 days, which is actually pretty good because January of last year, we're at 23 days. And that was kind of on its coming down a little bit, getting better as the year progressed. But we were able to see, I'm sorry, January was 29 days. So that's so we were able to see it come down from there. And this January was at 18 days. So less than 20 days to sell in a month that's usually on the higher side. One that I don't always talk about, but I thought would be interesting to bring in this time was number of sales. So this one I have it only going back to 2010. As you can see, the number of sales, it is a seasonal thing. So we do have every December, January, that's when everything dips because not many people put their houses on the market in the middle of the holidays. And so you don't see the sales happen in December and January as you would for the rest of the year. And then you can see where the peaks, peaks during the year and coming down. I thought this is really interesting to note just because for 2022 here and then 2023, we actually saw the number of sales just way different. Even accounting for the peaks during the year, you can just see here and down to about 150 when it came to January in terms of number of sales. So that's the all-time low number of sales compared to just even the past 14 years since 2010. So well below even 200. And so we'll see how that goes in terms of moving forward. But it's just, we've been having low inventory for 12 years. We've been having high median sale price kind of inching up over time. The big thing is that we haven't had this low number of listings and sales coming on, considering the last 2 years alone. So there is a lot of pent up demand, both in terms of buyers and sellers. One of the big reasons for what we did see over the last couple of years is interest rates. And so as of January, this is actually as of today, February 15th, or I'm sorry, yesterday, February 15th, you see a 6.77% is your fixed rate, 30-year fixed rate mortgage. I reported back in January that it was actually at 6.66%. So it did inch up a little bit over the month, but it is still, if you consider, and I could stretch this out, you can see we're at the all-time lows over the time, over the latter half of the 2018, 19. People were looking at interest rates of 2 and 3% and more. And then just over starting 2022, latter half of 2022, that just picked up. Like it actually doubled to where people were looking at 2 or 3%. And then over the course of a few months, in May and June of 2022, we saw the interest rates just peak up to 6%, 5%, 6%, and 7%, and kind of hovering and up and down to where we actually got to 8% last year. So that has a lot to do with what happened with our demand, buyer demand, to come down. And so houses started sitting on the market longer, prices started coming down a little bit. And thankfully that has eased up to where if you compare from October to January, October of last year to January, we've had like a 1% dip. So now we're talking about interest rates less than 7%, which is good. It's not 2 and 3%, but it is still good. The Fed is expected to lower their interest rates further by a little bit in June to start lowering interest rates, possibly starting June. It's kind of a mixed bag, because whenever you hear that the economy is doing well, that actually is not a good thing for interest rates. So the economic indicators over the past week, over the past month, have been better than expected. And so that's why it's actually taking the interest rates up a little bit. So it's kind of a, you want the economy to do well, but we don't want it to do so well that, we want inflation to be under control, so that the interest rates can continue to start coming down, because that will hopefully bring up a lot of pent-up buyer demand. So in the field, that's exactly what we're seeing. We here in the Bay Area suffered a loss over the past weekend with the Super Bowl, and our local team, the 49ers, having lost. And so very sad, but at the same time, we are seeing, usually what happens is after the Super Bowl, and we start seeing activity picking up. Open houses are super active. Homes that are attractive are starting to take offers and be sold very quickly. And buyers are definitely back, because of the interest rates have come down below the 7% mark. And so it's a lot more doable. And they're hearing good things about the future in terms of interest rates. At the same time, we're seeing the inventory levels are still low. Hopefully, usually right after the Super Bowl, we do see, whether we're playing or not, we do see an uptick in the number of listings. So we're starting to see that happening. And hopefully over the course of the next month, we'll have more inventory, although it may be sold very quickly as well. So that's kind of the heart of what, what I'm coming down to is really, there is pent-up demand and there are pent-up buyers. The buyers are coming and the sellers are coming. So this is for the whole of the country, United States. Over the next 2 years, we're expecting that there will be 3 million marriages and 7 million new babies. So significant personal milestones, meaning, on top of that, with the interest rates coming down a little bit, people who may have been waiting to buy because they didn't like the 7% or 8% in the last couple of years. We have definitely a pent-up buyer demand out there. And the loan agents that I'm speaking with, they're telling me that they're taking more applications than they have been in the last couple of years, just because people are getting more motivated to buy. At the same time, the sellers are coming. So over the next 2 years, 7 million people will turn 65. So it says on the slide, cash flush retirement age homeowners will fuel the market supply and also demand, right? So there's because you will have the boomers, who are the biggest population of right now, the biggest population of both sellers and buyers. They're continuing to have our population maturing and aging. And so people who turn 65 and ready for retirement are going to want to move possibly closer to family, or closer to, go out and enjoy their retirement, that kind of thing. So looking to downsize, looking to possibly upsize so that they can have their children come and join them. A lot of different things. There's a lot of movement that we're expecting over the next 2 years. And especially as the interest rates start to be a little more manageable, all indications are that there is a lot of demand going out there. So whether you're a seller or a buyer, it's a really favorable time to start thinking about, start at least getting ready for what you want to do over the next couple of years. Definitely with the buyers, I'm encouraging people to not wait, because as you saw, that median sale price, it does inch up over time. And especially here in the Bay Area, as much as people talk about out migration and people maybe moving out of the area, we still just don't have enough housing. And yes, there is housing that's being built. If you look up and down the peninsula, there's a lot of supply, a lot of new housing that's being built. Much of that is apartment housing, and it's going to be the smaller units, so 1 to 2 bedroom units, or even studios. And so for the people who are getting, the 3 million who are getting married, not in our area only, but the many people who are getting married and having babies, and the household formation, as well as those who are hitting retirement age and want to come to different alternatives of housing, we are going to see that the new housing that's being built is not necessarily going to meet their needs. And so the ones that's existing is still going to be in high demand. So again, I'm encouraging my buyers not to wait too long. And also the sellers, if you're thinking to actually sell and move to a new place, also not to wait too long, because it's really the more that you get for selling is not necessarily going to be that much that much more valuable if you're buying, because that what you're buying may also be increasing in price. So with that, that's my market update for this month for January, and to cover January. With that, I did want to introduce our new series, the seminar series that we have planned for this year, which I am very, very excited about. It's called Real Estate and Finance in the Golden Years. We have, as I mentioned in the previous slide, in the next 2 years, 7 million people are going to be hitting retirement age. That means about 7 million also are, because we're all aging together, are entering the senior age, what we call the senior age. I actually had went to my first senior luncheon yesterday, this week. In Millbrae, and that was an experience for sure. But this is the topic that I've been thinking a lot about, just not only for myself personally, but also for the different clients that I'm meeting. So many are either thinking about retirement and preparing for that, and or at the same time having to think about taking care of their parents. My parents and my in-laws, thankfully, are all still alive and with us. And they're in their 80s, and my father-in-law is turning 90 this year. So a lot of considerations in terms of their care in the future and whatnot. So that's why this has been really a long time on my heart and thoughts. And so I'm excited for the series that we'll be having. The first one we'll be having is called Transitioning to Your New Home. This is going to be covering downsizing, to a smaller home, upsizing to a bigger one, or just even relocating out. That will be held on February 28th, which is a Wednesday, via Zoom. And I hope that many of you will be able to join us for that. And we'll be also, doing a recording, of course, and posting it here on the YouTube channel. During that time, we'll be talking about understanding the process of buying and selling a home. So this has to do with your principal residence, not investment property, but really the whole nuts and bolts of, I live in my principal residence. How do I go about the process of buying another one? Do I need to move out first, or can I buy and sell at the same time, or what do I do? So we'll be talking about the timeline and the cost involved for that. I will talk a little bit about Prop 19 as well, and the implications of that in terms of how to transfer your property tax base, because there is in Proposition 19 that was passed a few years back, does include a way for you, if you're moving within California, to be able to keep your property tax base if you are 55 and older. So I'll be going into that a little bit. And then also Elsie Wu from Abundance 99, she'll be joining me to talk about bridge loans. And that's just one option to be able to help cushion the way where you can actually buy your home first, get the financing for that, and then sell your home after you're all settled into your new one. So we'll be talking about that, and again, hope that many of you can join us for that. In March, we'll be doing one on retirement and relocation strategies. This is one that we did actually many years ago. And I would say, at the risk of offending anybody else, but my favorite speakers, Joe Daly and Ron Ricard, will be joining us for that and talking about how you can combine the 121 homeowner exemption that you have for capital gains, combine that with a 1031 exchange to be able to strategize where you get into a retirement property. You buy a retirement property as your investment property, and then eventually that can become your retirement home. So really neat strategy. It's all legal, it's all tax worthy, and they're going to be explaining how that process goes, and that will be in person in Millbrae. And then in April, we'll be going through mastering financial essentials in retirement, and that will be another in-person one that we'll be doing. And we'll have an in-depth look, not so much just about real estate, but just an in-depth look into topics like Social Security, Medicare, long-term care insurance, annuities, the 401k and IRA minimum required distributions, just all the things in finance that you need to consider as you prepare for retirement or as you go into retirement. And these are conversations I'm having with my fellow moms from high school days, and because everybody's starting to hit that age of 65, getting closer to it. And so I thought this would be a really useful topic, even if it's not directly real estate related, hoping that it can be really of value to many of our community. And then in May, investing wisely in the golden years. So this has to do with, if you've had investment property or like rental property as investments, Maybe as we grow older, and also as California laws have been changing where it's much more tenant friendly, more and more people as they grow older are thinking, well, I want to maybe get out of the property management business and start investing my money in other areas, or maybe not do as many risky investments or not go into just the stocks. And I want to be more conservative, and look into what are the other options like Delaware Statutory Trust, the DSTs, or opportunity zones. Some people call them the O zones. Um, Annuities, what are some other investment vehicles that could be a little bit more suitable for people as they're looking into retirement years. In June, we'll do a remodeling options for aging in place, just because many more people would like to stay living at the place that you've been living in, right? And so what are some ways in which you can adjust your home, whether it be just remodeling or smart home features to be able to allow you to stay in your existing home much longer. And then August 17th, I'm super excited about, although the least prepared for, is a Saturday morning in-person session that we're going to be called Family Matters. Caring for aging parents. And I like the Family Matters. I didn't intend it this way, but it makes a lot. This pun is super cool to me, where family matters. Family is important, right? Family is crucial for so many of us. And at the same time, family matters in the sense of family affairs, right? Things that you have to take care of in terms of your family. So this whole idea of caring for aging parents and things to consider, healthcare and caregiving considerations for sure. We will be talking about recognizing early signs of Alzheimer's and end of life discussions, and handling trust and accounts and being ready to do that when our loved ones pass away. This will be open to everyone, whether you are an aging parent or you're caring for your aging parents, or that you're aging and you want your children to be prepared, right? So I'm really excited about that, and would love to, if you know of any topics that you'd especially like to hear about, I'm open to that and would love to hear from you. And then in September, in the fall, we'll be talking about estate planning. So this will be a combination of Zoom and in person. We'll be doing a basic session via Zoom, and maybe do a couple of them. We're just talking about why you need a trust in the first place and what's included in it. What are the procedures of putting a trust in place? So this will be for those of you who don't yet have a trust. If any of you have children and or own property, definitely highly recommend getting a trust in place. And we'll be talking about that. I've unfortunately been seeing different situations just by nature of what I do. I have seen cases where someone has passed away without a trust in place. And what that does is actually bring about a situation where the heirs have to scramble. Even if there's agreement, it can be a complicated process, taking years and tens of thousands of dollars to settle. If the heirs are not in agreement, it can be a very painful process. And in addition to being, again, expensive and costly. So expensive in terms of time and cost. So we'll be going through that, and I'm hoping to do a few different sessions because this is a really important topic to me. And then we'll do one in-person one on advanced real estate planning. And so this is going to be more in depth. Okay, we have a trust, but what are some of the possible issues and considerations to keep in mind? Whether it be tax considerations, whether it be what if there are multiple heirs involved, and how do you handle that? What's the best way of handling that? If you have two properties and you have three children, how do you do that? Or, if you have two properties and two children, do you give one to each of them, etc.? And different family situations, because we do have a lot of different family situations and heir situations now, blended families. We have, situations where there may be children from different marriages and having to navigate that. So how to consider all of those things and avoid any lawsuits or tax issues after you're gone. So I'm really, and that will kind of round out our real estate and finance in the Golden Year series. So I've taken some time to go into that, but I really consider this as super important and excited and wanted to explain a little bit about what we're doing with that. So if you're interested in any of these and you are on our mailing list, on our email list, please watch out for the announcements so that you can sign up for it right away. Next time I'll have a QR code in here for the sign up form. If you are not on our mailing list, then please make sure to contact me, and always you can get a hold of us through the links in the description, information in the description, so that you can get on our email list and make sure that you are aware of when these seminars are coming up. And again, we're doing a combination of Zoom and in person. I am planning to record every single one of them, and we'll have them available on our YouTube channel. But it's always best when you're right there and you can ask questions as well. And then finally, I'm just going to do a quick announcement of our ever popular shredding event that we'll be having. It does include e-waste, electronic waste recycling. And the documents are shredded on site. So there's a truck there. You can come in and you can stay until you know that your documents have hit the shredder. That will be on Saturday, May 11th from 10 a.m. to 1 p.m. at Mills High School in Millbrae. And I only do this once a year. It is quite expensive to do, but I do love doing it because it's a great, I love being able to see the rest of the community. It is free of charge to everyone who comes, but we do always accept donations to support the Mills High School Annual Fund. That's where both of my daughters went to, and really they've been doing very well, thanks to, I think, thanks in large part to their teachers and the staff at Mills High. So I love being able to continue to support them. We are asking that you do register, so I do have a QR code for this. So if you can go ahead and scan that QR code, again, make sure you're on our email list, and then that way you can make sure to be aware of any events that come up in the future. And with that, thank you again for joining me, for joining us today, and for this edition of Perisson Pulse. And I wish you a wonderful weekend ahead. And if you're in the area, I'm actually going to be at the Millbrae Lunar New Year Festival. That's been postponed to Sunday because of the weather. So please come by, and I'll have red envelopes with chocolate coins in them. And thank you very much. Have a great weekend.